2025, are you ready for a wild ride? Forget whatever you knew about investing in 2024, because this year, volatility has been ramping up, recession whispers have been getting louder, and the new administration, well, let's just say uncertainty has been the new normal. But here's the kicker, this chaos can be your golden ticket. If you want to learn how to make market mayhems into millions, then stick around because I'll be sharing few key tips later in the video. Alright, let's talk about what's really happening. You're seeing it, I'm seeing it. Those high quality stocks, the ones that we all know and trust, the ones that were flying high, have actually gotten significantly cheaper. And it's no mystery why. We've been facing a cocktail of risks. Tariffs have been disrupting supply chains, geopolitical tensions have been rattling the markets, and inflation has been eating into the profits of the companies. And let's be honest, some of the stocks were simply overvalued. This isn't just a dip, it's a recalibration. Now, let's address the big question. How can we stay grounded in such times? Here are 5 key tips that have helped me, and I hope they help you as well, to navigate these times and come out on top. Build a long-term strategy. Let's zoom out for a bit and take a deep breath, because here's the fundamental truth. Historically, stock markets have generated high returns over long term. It's about perspective. If you are here and you're thinking, oh my god, this crash is going to ruin me, but boom, in the long run, you'll be making money if you have invested in stocks that had strong fundamentals. Look at historical charts, look at S&P 500 over the decades. Dips happen, but the overall trajectory has always been upwards. So let's get our heads straight and focus on the long haul. Create a 5 to 10 year long investment plan that aligns with your family's goals. This is going to be your anchor. It's going to be your roadmap. Don't just throw money at the market. So sit down, write it out, know and understand what's exactly that it is that you're saving for. Is it your retirement? Is it to buy a house? Is it your kids' education? So define your goal and then create a plan and then try and reach there. Diversify smartly. Markets are going down, and trust me, that's never a fun feeling. And there's always this one question that always lingers at the back of our minds, and it is, what should we be doing when the markets are going down, especially when it's about our hard-earned money that's on the line? Simple answer is to diversify your portfolio. Set aside some portion of your cash for emergencies in the form of bonds that will continue to earn interest and at the same time be easily accessible to you in your times of need. Then set aside another portion of cash as investments in ETFs and stocks. And rest you can invest in assets that would act like hedges against stock market. For example, this can be real estate, gold, Bitcoin or global markets. What this will do is that these will act as buffer when the market dips. Do not put all your eggs in one basket. Stay disciplined. Avoid FOMO and chasing those hottest stocks in the news or the most hyped stock. But stick to your plan. Remember the strategy that you had created in the previous points. Resist the urge to react emotionally. News outlets always tend to sensationalize things. Do not fall for it. Buy quality stocks and avoid panic selling. This is where conviction comes from. If you've been investing in companies that are fundamentally strong, then panic selling becomes less tempting. Remember Meta in 2022? It was down to $90 and look where it is now. This is the power of buying the dips. Imagine all those people who had sold out at the bottom. Well, they missed out on massive gains. So do your homework and invest wisely in quality stocks. Keep calm and DCA. Dollar cost averaging during downturns is going to be your best friend. So set up automatic investments into ETFs or index funds and repeat after me. This volatility is only temporary. Markets will rebound because that's what they do. Don't try to time the market. You can't. Nobody can. So just set it and forget it. Continue to invest consistently. If you're setting aside $100 per week, continue to do that, and maybe during the dip increase it a bit, because that's when the best deals happen. This is about building long-term wealth. It's about staying focused. It's about having a plan. So how is this market making you feel? Are you feeling a little bit more confident after watching this video? Do let me know in the comment section. I'd love to hear from you. And if you want more such strategies, don't forget to hit that subscribe button. And remember that we're in this together. Stay calm, stay focused, and keep investing.